Marak at carolmarak.com. Welcome to my YouTube channel, Solo and Smart. And my guest today is Alesia Dutton, and she is a home equity retirement specialist, and she's been one since 2013. And today, Alesia works with Mutual of Omaha reverse mortgage, and she focuses only on reverse mortgages. And I invited her because I'm being very selfish here. I want to learn more about reverse mortgages. And so Alesia really stays very hyper-focused on this market. And she is currently on the board of the National Association of Insurance and Financial Advisors in New Mexico, their chapter in New Mexico. And this position allows her to access up-to-date information on government changes that can affect retirement and asset growth. And Alesia has dedicated her career to educating bankers, loan officers, financial advisors, estate planners, and realtors about this program. And she prides herself on personally walking all homeowners through the process, getting to know them as individuals and clients. Their needs and timeline are always her priority. Well, welcome, Alesia.
Well, thank you very much, Carol. I look forward to answering people's many, many questions about this very misunderstood program.
It definitely is misunderstood. And just one quick question for you. Is it okay if I post your email in the description of this video so that people can contact you and ask you questions?
Absolutely. And that's what I pride myself on, is educating. And that's why I feel I've been so successful since 2013 is it's not something I'm selling. It's something I'm educating people on because they have lots of questions. So I'm please use me as a resource.
Oh, great. Well, thank you. Absolutely. I love that. And so what I did is I posed questions. I told my Elder Orphan Facebook group members that I was planning to interview you for my YouTube channel. And so I posed I just said, does anyone have questions around reverse mortgages? Because I know it's kind of a frequent discussion that we have, because many of them are considering it for their long-term care plan. So the first question did come, or there were several that did come from the group. However, I have a few questions myself, so we'll end it with my questions. So I'll just use the first initial of each person that asked a question. And the first one is B. And she asked, I am under the impression that someone would have to be 63 to get a reverse mortgage. And if they did that, can they take a lump sum then, at age 63 to use for home repairs, a new car, and then take more out in monthly payments later to supplement income?
Yes.
Oh, good.
So the very basics of a reverse mortgage is you do have to be 62 to qualify. So Texas is unique in that both individuals have to be 62 to qualify for a reverse mortgage. In any other state, only one of them has to be 62. So that's something to keep in mind. So she was close, not 63, but 62. And at that time, depending on, well, the other qualification is you need to have about 50% equity in your home or have it paid off. Paid off is the way to go, because if you get approved, and you get approved for approximately 50% of what your house appraises for. So let's say it's a $300,000 home, and you get approved for $150,000. If you do have a mortgage, let's say of $50,000, we get that paid off because we don't want you to have any mortgage payments. But if you didn't have a mortgage, that person would have $150,000 that they're approved for. And yes, they can get cash out at closing. Let's say I've had people say, you know what, just give me $25,000 at closing and put the rest of it in my line of credit. I tell people, if you don't need the money, leave it in that line of credit because it actually has a growth rate of 3%. A lot of people don't know that. It's not just sitting there in our savings account for you. It's growing and it's tax-free monies. So keep it there as long as you can to let it grow. But if you do need to tap into it, whether it's monthly payments or you just call and need $1,000, whatever it may be, that is your line of credit monies and you can utilize them however you want, tax-free.
Okay, so are you making payments on that as you go
No.
on? Okay.
It's very, when I tell people, you know, we say we'll pay off your mortgage for you. That is, reverse mortgage is just another type of mortgage. So you're refinancing from a regular mortgage to a reverse mortgage that does not require payments. So if you have a $200,000 mortgage, move it into a reverse and you no longer have those mortgage payments. The balance doesn't get called due until you either sell that home or until both of you pass away. And at that time, the kids will usually sell the home. 99% of the time they sell the home. They've got up to a year to sell the home. They pay off the balance of what is due. The remaining monies go to the estate. Good question.
Okay, great. And In asks, at what age would someone be best able to get the highest return on equity when doing a reverse mortgage?
So the way a reverse mortgage works, which is real different from any other mortgage, that's why that is all I do. The older you are, the more you get approved for because of life expectancy. So the older you are, the shorter amount of time you have to use that money, okay? So if you're in your 60s, you'll get approved for about 40% of what your house appraises for. 70s, 50%. If you're in your 80s, maybe up to 60% of what your house appraises for. But I tell people, if you've got your mortgage paid off and you just want to get to those monies, but you're like, I'm going to wait till I'm 80 when I can get a big chunk. Why wait? If you've got your house paid off, you turn 62, get that money put into that line of credit with the 3% guaranteed growth rate. No matter what happens in the real estate market or whatever, let that money sit there and grow. That's the whole concept, is why wait? So I recommend, if you've got your house paid off, do it at 62.
Yeah, well, that makes sense. Yeah,
it makes sense, but a lot of people don't know that that's how it works.
Right. Okay, and H asks, she says, I have an HECM, and maybe you can explain what that is. She has an HECM loan taken 18 months ago. Should I look into refinancing since the rates are low right now?
My phone is ringing off the hook because of this exact situation right now. So a HECM is a home equity conversion mortgage. In 2013, the reverse mortgage program has been around since like 1950. In 2013, they fully regulated it because bad things were happening. It needed to be, the reins needed to be tightened up on it. And that's when it kind of became a new I call it the new reverse mortgage. And that's when I started working with them, because it was a really powerful program that just had some issues that were gone as of 2013. At that time, it kind of got this new name, a home equity conversion mortgage, a HECM, but it's a reverse mortgage. It's just the new one. So that's what a HECM is. You can refinance a reverse mortgage, which a lot of people don't know, just like you refinance a loan to get more money out because your house is appraising for more, let's say now, especially now in Texas. If you've been in a reverse for over 12 months, you can do one. So yes, I need to speak with H about her HECM to see if we can get some more money out of it. Because a lot of times people have that line of credit, but they use it up to take care of home repairs, new car, life happens, you need a new roof, air conditioner, whatever it may be. But if your house is appraising for a lot more than it was when you originally got the reverse, we might be able to get some more monies for you.
Nice. Yeah, I wasn't aware of that. Thank you for explaining that.
Yeah.
And E ask, if you do get a reverse mortgage and then want to move out of that house,
Yep.
what happens then? And then she goes on to say, I don't want to live and stay in the area that I'm in now for the rest of my life. So should she wait, or what do you suggest?
Well, okay, so my answer I put on that one is the reverse mortgage balance. So every month you get a statement that says, this is how much you owe, because that's growing at a rate of about 3% over time because you're not making payments. So every month it says you owe this, and the next month a little bit more, but you're also, if you have a line of credit on that monthly statement, it says, and this is how much you still have left in your line of credit, which that's growing at a rate of about 3%. So those are the monies you can spend and what you owe. So nothing is due till you either sell or both pass away. So let's say at age 75, the couple decides to move into assisted living or independent living, something like that. They get their monthly statement. They owe $150,000. They can sell their house for $350,000. They sell it, pay us back, walk away with $200,000.
Okay. Okay. All right. Well, that's good to know.
Yeah.
Yeah. It seems to me that, I mean, I was aware of reverse mortgages back in the early 2000s. Things have really changed.
Oh, yeah. They've really changed.
Is that because of the government changes? What do you call that?
The regulations that kicked
word.
in. Yeah.
The regulations.
Regulations. It's almost over-regulated now. They do require a lot of documentation, things like that, but they're just making sure this is the right fit for that person. Since 2013, we have to do a full financial assessment, which before you got good credit, sure, you can have one. Really, it was very easy. And now we want to make sure that based on your finances as a whole, like what the advisors look at, that you can afford to continue paying your taxes and insurance and maybe HOA fees for the rest of your days, because with the reverse, you are responsible for your taxes and insurance.
Right.
You can get them escrowed, but you really would have to get approved for a lot of money. But most people, they just take care of them themselves.
Yes. So you're also responsible, not in addition to property taxes and home maintenance, you're also responsible for like, what else? Like your insurance, did I say insurance?
Homeowners and taxes, property taxes, homeowners insurance, and then homeowners association fees. If you live in a community, you're responsible for those.
Okay.
Yeah.
Right. And upkeep, right?
And upkeep, mainly if you decide to sell, you want it to be in good condition, or then you leave it to the kids. You want them to be able to get a high value for it. So you want it, well, and also you want it to be a safe place for you.
Right. Yes.
Right.
Yeah. Do you know of people that might have used a reverse mortgage proceeds for upgrading a home in terms of, aging in place?
My mother, she got new windows. She didn't have an air conditioner. She got an air conditioner. She got in the backyard where she had fallen, because she had little stepping stones. We had it all paved, so it's flat, because she's got this beautiful garden in San Diego, California, flowers everywhere. And now she's like, I'm going to go sit out and read, and there's birds, and she's got a little bird bath, but she wouldn't go out there anymore because she was afraid of falling again. So we got that taken care of.
Nice.
She did some major upgrades because she's like, I'm not going anywhere. I love this house. So absolutely. Now, another reason a lot of people will use it is medical, home health, bringing in services. A huge one is if one of the spouses, unfortunately, gets dementia and needs to go into memory care. Memory care is extremely expensive, $5,000, $10,000, $15,000 on up a month, but it's the best place for someone who has really bad Alzheimer's, which usually gets worse over time. And well, it does get worse over time. But if the person's living in the home, you don't want to be tapping into your assets that you've worked so hard for to save, and you own your house free and clear. Get the line of credit, use those monies, they're tax-free monies, to pay for that, however long it takes in memory care. And that way you're not touching those assets, which are still vital to you and your rest of your life.
Right.
So that's another really good use.
Okay. Okay. And most of the folks that, well, not necessarily, but a lot of the folks watching this video are solo. You know, they don't have.
Oh, that's right. That's right.
So if they can't really use it for placement, for moving to a senior housing, because then
Right.
they're out of their home. They have to live in
Right.
their home.
You have to live in the home. Yes.
Yeah. Yeah. However, you can use that equity to pay for home care or pay for a caregiver or pay for whatever.
Absolutely. Yes, 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 yes. And that, then it's not out of your price range. Get the help you need. Don't let costs stop. You know, my mom has so many people coming in to help her, and it's just been wonderful. With
Right.
COVID, she hasn't had to go out.
Nice.
Yeah.
Nice. Very good. Okay. And then I have one more question from Jay. And he asks, how do interest rates impact the payments to homeowners from reverse mortgages? Are the payments higher or lower?
So rates go up and down on reverses, just like with any other loan. Right now, the rates are low. What's weird about reverse is when rates are low, the disbursement that they allow is bigger. If rates are high, the disbursement's lower. So we like when rates are low, because then we can say, oh, you're approved for this amount of money. Whereas if the rates start going up, then we'll say, oh, the rates went up. We can only offer you, instead of 100,000, we're down to 90,000 because we waited a week. You know, you want to get locked into those rates just like with any loan. So that is how rates affect a reverse. They're very different. If they're low, bigger disbursement. If they go up, smaller disbursement.
Got it. Okay. That makes total sense.
Yes.
Total sense. Now, my question is, what factors should one think about when considering a reverse mortgage?
So one of my first questions is this your forever home? Because that is, the whole concept is just stay in that home forever. And because some people are just getting their mortgage paid off, they're not getting any additional monies from it. Just not having that mortgage payment just opens things up so much, and they know they're going to stay in that house forever. So I always ask, is this your forever home? Are you planning to move? Because they are expensive. So it makes it worth that cost if you're like, oh, but I'm going to be, they end up paying for themselves in about, because of that line of credit growing, they end up paying for themselves within about 5 to 8 years. But if you're staying there forever, it's well worth it.
Okay. And so what are some of the fees associated with the reverse mortgage?
The fees are just like any real estate transaction. So you've got title, escrow, they have to do the appraisal, there's counseling that is done. Any of the inspections that have to be done, just like a real estate transaction. But the reason they're so expensive is because there's a mortgage insurance premium, MIP, that is 2% of the value of the home upfront and 0.5% ongoing. So when you look at fees, let's say it costs you $6,000 to just refinance your regular loan. It's $10,000 with the reverse because $4,000 of that is the MIP. It's a big chunk of the fees, but the MIP is what makes it so you are not required to have to make payments.
Now, what is the MIP again?
Mortgage insurance premium. So it's an insurance.
Got it.
That you don't have to make payments, and it ensures that we're not going to require a payment. So it's you want that MIP.
Okay.
And then back to your question about what to consider what to think about if you're getting a reverse mortgages. Do your kids plan to live in your home after you pass away? 99% of them don't. They don't. So that's where I talk to people about, they're like, well, I really want to leave my kids my home. Have you asked them if they want it? Right. I have people, so I've been sitting down with the kids, they're like, Mom, we don't want the house. We'd rather you comfortable, with more money every month to buy the grandkids toys or whatever. So The whole concept I try and work with on financial advisors is changing the legacy of leaving your kids the home to leave them your assets. And this is what financial advisors love. They're like, don't touch those. I mean, anytime, things are going up and down, they're like, just leave them alone, right? They say, just leave them alone. Leave those until you absolutely have to, because usually tapping into them, there's taxes to pay, right?
Right.
So
Exactly.
instead, utilize the home equity. Those are tax-free monies. Use those for the just in cases that happen in life. So when you pass away, you're leaving the kids assets, maybe life insurance, which they can get to right away. The home may take them up to a year or something to sell it. They won't get any of the monies till they sell. If you leave them assets, they maybe have some monies to put into the house so they get top dollar instead of having to spend their own monies to fix up the house to sell it.
Right.
So I say, utilize that equity. Don't touch those assets. That's the whole concept.
Well, that's interesting. Yeah. That's a topic for another conversation.
Yeah, that's a good one. I call it the 3 buckets: income, assets, and home equity.
Right. Very good. Okay. So can you tell me some of the disadvantages to a reverse mortgage?
As I stated, they're expensive, but because when they were originally designed for people that were retired, who have less income than while they were working, we finance all the fees. There's only 2 fees that they're held responsible for. There's a $125 fee for that FHA counseling that is now required. I love it because it makes sure I didn't miss anything. Very professional phone call. I give them a list of like 12 1-800 numbers, send it to them. They pick one, they call. Once they pass the counseling, they get a certificate, and that means I can move forward with the loan. It's just a big security blanket. I love it. So 125, and then they put down a $300 deposit on the appraisal. So that's the only out of pocket. If they can't afford that 300, we can work with them.
Okay.
The only other disadvantage is if your home valued less than you owed and you decided you wanted to sell it. This is a reality. Someone lives in their house forever and their house has not appraised for more. So their balance of what they owe has gotten to be more than they could sell their home for. So if they wanted to move, they got to pay off this balance.
Mm-hmm.
It's more than they're going to get when they sell the home. That's why I ask, is this your forever home? Because you never know when that could happen. Even in Texas, you never know where what you owe is more than the house would sell for.
Right.
But what people love about this FHA government insured loan is that it's non-recourse, which means no debt's ever forwarded onto the estate. So if they pass away and the house is not going to pay off the balance, they can deed in lieu the keys back to us. We're responsible for selling it and getting whatever we can, but the kids have nothing to worry about. People love that.
Okay.
Yeah.
Well, that's good to know.
Yeah.
Now, do you advise people once they're approved and they sign the papers and everything goes through to not spend it frivolously?
Don't blow it.
Right.
Well, actually, what they've done, they're so smart about this because people were doing that. So you're approved for $100,000. We don't just say, okay, here's $100,000. People were blowing it. So they split it into 2 payments now. Okay. You get 40% at closing. You could get to that. Let's say it's $100,000. You have $40,000 in your line of credit for the first year. Do with it what you want. If you blew it, you blew it. But luckily, you've got $60,000 more that will be put back into that line of credit exactly 1 year later. So I think they kind of figured out that that's how people, if they were frivolous with the first chunk, maybe they learned their lesson and they know they've got 60 more coming in a year. Because life happens,
Yes, it does.
Yes.
Yes, it does. So my question to you then, that 40,000 that's given to them, or
yes, the line of credit.
What was that?
It's in the line of credit.
Oh, okay. So is that drawing 3% interest?
Yes.
Okay.
So that's why some people are like, just give that to me at closing. And I'm like, do you need it all? take 20, leave that other 20 in there, let it grow a little if you don't need it all. Some people need it all. They've got some home improvements or need a new car or whatever.
Right. Okay. All right. Well, those are all the questions that I have and my listeners and members have. Is there any tip that you'd like to leave with us? Any type of an educational information or something else that you'd like to leave?
There was one last question you had put down, and I thought it was a very good one. How can one evaluate whether a reverse mortgage is suitable for them?
I see that.
Yes. And it's a good one to close with too, because I like to work together with the person. So together, I get all the information, I ask all the questions I need, I put together a quote, and if it's not going to fit your needs, then this isn't the right fit for you. And there may be some other options out there. So, oh, that didn't sound good. It says, I like to work on this together with you. Together, we get all the facts, put the numbers together, and decide if it's a good fit. And that's where that's where I'm not in sales. I am like counseling, educating together. You know, my whole thing is, what's your why? Why are you thinking about doing this? And if it's because you want to spend more time with the grandbabies, whatever, let's see if we can make that happen, because you need to be able to afford those flights to get there to see them in Minnesota or wherever they are.
Right.
So yeah, so I'm trying to make sure it's the right fit and that it's a plan. It's part of a retirement plan.
Okay, well, that's great to know. I will put your email in the description below, but if you would like to say your name again with your email address, I invite you to do that.
Absolutely. My name is Alesia Dutton. That's D as in dog, U-T-T-O-N, like button on your shirt, but with the D as in dog. And a lot of people call me the reverse mortgage lady because I've networked a lot, and I've had people go, this guy told me to call you. He had your number, but he didn't even know your name. He just knew you were the reverse mortgage lady.
Hey, that's great.
Yep. And my email is adutton@mutualmortgage.com. I work for Mutual of Omaha, reverse mortgage. That is all I do. Now, one last note, if you are 62 plus and you're thinking of moving, downsizing, or just moving closer to the kids or whatever it may be, there's a program called Reverse for Purchase. Call me, email me, ask me about it. It can really save you a lot of money. It's been around since 2009.
Wow, well, that is going to be another interview.
Absolutely.
Okay, Alesia, thank you so much. And thank you, listeners. Appreciate you visiting Solo and Smart. Circle back in the next day or so where I will have more tips for living and growing older. Thank you. Thanks,
Thanks,
Alesia.
Carol. Thank you.